Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. All right, the month of March is upon us, and this is going to be a pretty critical month for the market, both broadly and here on the S&P 500. This is a month where the bears really have the best opportunity they've had in a while to follow through on some downside momentum that they've established over the last couple of days. Hold the 20-day, the green line there as resistance, convert the 50-day, the red line, into resistance, and potentially start a little bit of a lower band ride down, dealing with things like the 100-day exponential moving average down there at 3681. If they're unable to do that, then what the last 7 to 9 sessions is going to look like is a test of both the lower Bollinger Band on the daily as well as the 50-day, and on a conversion of where these two lines meet, the 20-day and the 9-day, then the bulls have an opportunity to go ahead, challenge the highs, and we just basically get back to business as usual, which is small retests, dips that are bought, higher highs, and onward and upward we go. So March, especially the first half of the month, and and this week is where the bears really have to keep pushing. They can't take days off. They have to keep pressing. They had a good day on Friday. So looking at the hourly chart, you can see green line, there's your 20-day. Blue line, that's your 9-day. The new weekly pivot is 38.42 and change, and we have been basically ping-ponging there after the gap up from the Friday close. So Friday came down, challenged 37.90. They looked pretty good doing it right at the end of the day. Then they allow the gap up. They allow it to keep going, and now we're battling here. Bears can't afford to battle up here. Bears need to be battling down here. They need to be putting stuff with 37s on the front of it on that tape. The longer they let this stuff go, if they don't come in and reject in the regular session today and close below weekly pivot, keep the 50-day in play, then what you're going to see is the conversion of weekly pivot to support early in the week, a move up toward the 9 and 20-day, and then we start talking about things with 39s on them instead of things with 37s. So the whole week is up for grabs at this point, and I'll be very interested to see which side takes control. So starting the day today, volume weighted average price is hanging out there right at the area of weekly pivot, 38.43, almost 38.44. We've got hourly mid-band, 38.60. Our proprietary moving average is sitting right just underneath 38.50. So the 38 to 50 area, all centered on 42, is what's going to be really important off the open. We'll have to see if the volatility wants to continue. We had really good volatility last week. Not insane volatility, not 2020, what's happening in the world volatility, but it turned it into a very two-sided tradable market at times. The inflection points were a little rough, but not all that bad. It was very tradable. So we'll see if that continues this week. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.